Good morning, everyone. Hey, it's Greg Harrelson here with Century 21, the Harrelson Group, with, of course, my co-host Abe Safa, also with Century 21, the Harrelson Group here in Myrtle Beach, South Carolina. And we just want to, as usual, share with you a weekly update on what's going on in the Myrtle Beach real estate market. The market is very active. There's a lot of conflicting information on news channels, and it doesn't matter what news network you're looking at, or if you Google articles, Google the current market shift in real estate. If you just Google real estate shifts 2021, you're going to see all kinds of articles, and a lot of those articles are going to look fairly doom and gloom. It's going to look like the market's about ready to crash. I think you'll see by the end of today's conversation that we don't see a lot of indication that we're going to see a crash. We are seeing some things, change. The conversations are changing a bit. And we'll talk a little bit about that. But Abe, thank you for joining me on another week. And I'm sure you brought us some numbers, right?
Oh, yeah. Yeah. Always a pleasure, Greg. Yes. I mean, I think you're spot on. There's a lot of mixed messages out there. And I think there's a lot of confusion or starting to be some confusion with consumers out there. Like, is the market still hot? Has it cooled off? Has it shifted? So I'm definitely hearing a lot more of that conversation coming out of people's mouths as I talk to sellers nowadays and buyers.
Yeah, no question. And I thought before you get into the numbers, you were talking about a National Association of Realtors statistic about annual sales, and what is the annual sales looking like across the country and for real estate closings?
Yeah, so this is National Association of Realtors, NAR, and every month they come out with a number, and it's a number based on a forecast of what they think the year is projected to do. So every number it kind of fluctuates up and down. But as of July, and this is just resale homes only across the country, right? This doesn't count new construction or commercial. Right now, we're trending at just under 6 million homes sold. 5.99 million is what the number came out as of July, which is a very strong number.
Yeah.
I think last year was 5.7 or 5.8. It's always like year after year, it's always in the 5.6 range, 5.7 range. It always fluctuates right around that range, give or take a couple of 100,000.
Yeah.
But that's a strong number relative to what we've been the last few years.
Do you have any idea of when that it might have been over 6 million? I mean, is there been a time where it was over 6 million?
Yeah, so back in the bubble, 04, 5, 6 years, we actually peaked at 7.26 million. So over 7,260,000 homes. That was the height. And I can't remember what year that was. I have to go back and research it. I want to say maybe 06 was the year.
Probably when a lot of what was going on, and people that weren't really in the real estate market back in 06, but a lot of the coastal markets, like Myrtle Beach would be an example.
Yeah, so there was a lot of turnover. There was a lot of homes sold back then.
Yeah, but here's what a lot of people don't understand. Like, so in 2004, late 2004, there was a lot of new construction on the ocean front that started. And when you're building a high-rise building, that high-rise building takes 2 years to build. So if they started construction in 2004, they may have made sales contracts in 2005, but the closings didn't occur until 2006. So there were thousands of closings taking place just in the Myrtle Beach market that were really sales that they had made in the previous year, but they were waiting for the building to be completed. And then you take all of the Florida coast, you take the South Carolina coast, the North Carolina coast, and that attributed to thousands and thousands of actual transactions. So there was kind of like a little bubble where there's so many that closed at one time. Surely that doesn't probably make up a million, but there's that's kind of a uniqueness about that time.
Yeah, no, absolutely right. So, comparing the two numbers, like, 6 million this year, let's just say we continue this trend and close out at 6 million relative to 7.26 million. That's a big difference.
Yes.
Right. So right now, you and I know this is one of the hottest markets, really the hottest market that we've seen as far as how quickly homes were selling and also the highest prices we've gotten.
Yes.
But when you look at total number of sales, it's not nowhere near what the height was back in 06 at 7.2 million homes.
And between these two extreme numbers that we're talking about, 2006 and right now, everything you said is kind of like in the mid 5 million, say 5.5
That's correct.
million
Yeah.
sales. And I think what's important to note is it's typically in the middle 5.5, 5.6, maybe low 5.4 range, no matter if the market is hot or the market is cold.
Right.
In other words, if the market is hype, if the prices have appreciated or the prices had depreciated, if there's foreclosures, if there's no foreclosures, typically the number of transactions that trade in America are relatively the same. The price points may go up and down, but the number of transactions stay relatively the same. That's always what I find interesting, because some people say, oh my gosh, the market's crashing, nobody's buying. But then you look and say, well, there's 5.5 million sales. And then another time, oh my gosh, everyone's buying, this market's crazy. And there's still 5.5 million sales. So usually it's not the number of sales that people are looking at. It's their reaction to the current price of their property at that given time.
Yeah, at the end of the day, that's what matters. Like right now, if we've had inventory the last 8 or 9 months, we'd be at a much higher number than 6 million for the year. So I think that's been a function of keeping that number down. Now, would it have gotten to 7.2 million? It's hard to tell, maybe, but we are still we have been and still very, very low inventory. Now, you talked about the fluctuations. You're absolutely right. There's not a whole lot of fluctuation around that 5.5, 5.6 million. But when the market did crash back in 08, there was less than 4 million in sales.
Wow.
So it went from 7.2 million, all of a sudden dropped to just below 4 million when there was a point where very little was selling at that time.
So usually an extreme high is counterbalanced by an extreme low, and then it normalizes.
Yep.
And then over time it goes to an extreme high, usually followed by an extreme low, and then it kind of normalizes. And these are just the trends. Some people say it's a 10-year cycle. We can't use that old rule of thumb, because this has surely been much more than a 10-year cycle. But anyways, let's get into the more localized data. So tell me, or let's share what the data shows as to how the market's doing.
Yeah, I mean, it's kind of been as far as numbers go, it's kind of been somewhat flat.
I'm anticipating flat.
Yeah. We've been declining week after week. And when I say declining, what I'm looking at is how many homes are on the market or how many condos are on the market. And out of that, how many of those are actually under contract. Yeah. And I look at that percentage. And I also look at, is inventory growing or is it going down? So inventory has slowly been growing. Nothing tremendous, okay, but an incremental change. The number of pendings relative to what's on the market has also slowly been dipping. And as we'll see right now, let me go ahead and share my screen. As we'll see in these numbers. Give me 1 second. Let me pull this up. Okay. So there's a single family homes, 66.86% of every home out there right now is under contract. Now that's still a very, very strong number. And I think that's why you're getting mixed emotions and mixed comments from different people out there. Because if you just took a snapshot of that, it's an extreme seller's market. We're sitting at a 1.2 month supply of inventory right now when it comes to single family homes across the board. So there's not a whole lot of inventory out there, but when you look relative to what was happening back in April and May, that number was higher, right? I think it was like 77% or 76%. So it's slowly kind of been declining, day after day, week after week over the last 3 or 4 months. But again, it's kind of flattened out the last couple of weeks. Inventory is still super low. It's still a great time to be a seller right now. There's not a whole lot of options out there for buyers.
Yeah. I took a listing, and I'm going to help a seller in a community called Arrowhead. It's not on the market yet because we just reached an agreement on our strategy yesterday. But we'll be the only home on the market in Arrowhead, like the only home.
Right. And that's a big community.
Yeah, there's probably got 500 plus homes in there, and it's the only home for sale. So that's incredible. But again, there are little pockets where it's softening a little bit, but residential homes is usually not one of them. But yeah, so what else you got there?
And when we say softening, again, that home is going to sell. It's going to sell fairly quickly. It's just we're not. Homes are just not selling in the first 5 minutes with 12 offers. Yes. Not as many homes. It's not happening like that anymore. But homes are still selling and they're still getting great prices. The resale homes, down to 58.26%. That number was at least 10 percentage points higher, 10 points higher, back in the spring. I think that number almost hit 70. Like we were waiting for, I know you and
Yes.
I every single week,
Yeah.
like, is it going to break 70? And I think we topped off at 68, maybe, or no, just under 70, like 69.78% is where it topped off at.
Mhm.
Okay, but that's a substantial change. If you kind of look at a bigger level and say, okay, what have we done? What are we trending at to go from 69 to 58 over the course of 3 months? I think it's pretty significant.
Yes.
So that's what we're talking about as far as the market softening. We may be in the beginning of a shift here. It's things like that when you look at the numbers at that detail of a level.
Mhm.
New construction homes, pretty similar, down to 74.65. That one was 80% at some point. So pretty much comparable. Last couple of weeks been somewhat flat as well. The condo market is pretty interesting, Greg. 67% of all condos right now are still under contract.
Mhm.
That number has not changed much. So believe it or not, condos are still hanging in there pretty strong. We peaked at 68%. So that number relative to what's happening in the single family home market right now has kind of held a little bit stronger over the last 3 to 4 months. And it's a function of inventory. Again, there's only about a 1 month supply of inventory in condos right now in the entire market.
Yeah. Well, there's another function I think besides inventory, and that is, so I'm, I keep my eyes and ears, open to seeing what real estate agents in forums across the country, what they're talking about. And there's a huge trend in the investor market where there's investors looking for properties in resort markets like oceanfront properties to do Airbnb.
Mm-hmm.
Now, we've always had properties, sold properties to people that were going to use properties, themselves for a couple of weeks, and then they were going to let the on-site rental company rent those properties, and they were hoping to offset some of their income or offset some of their expenses by having their property on the rental income or rental market. They didn't necessarily think that they were going to make a lot of money, but they thought they could have a vacation spot and it not really cost them a lot of money. Well, because prices have increased so much in single family homes, a lot of investors that normally like to buy homes, they can't get the returns that they're looking for. So now they're coming into the condo market. They never liked condos before, but now they're coming into the condo market with an Airbnb strategy, which is kind of they rent the properties out on their own through Airbnb, and they cut out the middleman, which is the rental manager, which cuts out a lot of expense. Now, I'm not saying that you should or you shouldn't do this. What I'm sharing with you, there's a lot of agents and investors talking about that. So I do believe that there are buyers right now that normally are not necessarily oceanfront type investors, but they're buying and they're going to give it an Airbnb shot to see if they can make some really good returns. So we have that buyer in the market right now that we used to not have. And then we also have the fact that it is August. So we are kind of like in a very nice selling season for resort properties. So it'll be it'll be interesting to see once the summer is over and we get into, say, October. I'm really, the whole condo market numbers to me is, I'm interested to see what it looks like in October and November.
No question. Another 30 days, 60 days from now will be a good sign, a good telltale for us.
Yeah.
Kathy Clark just asked a question, what's happening in Baywatch?
Oh,
Baywatch was doing pretty well. They had a run for a little while, but now, last 30 days, I think eight or nine units have hit the market just in the last 30 days or so. So I know, Greg, you just took a listing there, and so we're starting to see more inventory come up in Baywatch. But it's still fairly strong relative to what they've been.
I haven't seen like any pullback in pricing.
No.
What I've seen with Baywatch is an increase in inventory. So what I anticipate over the next couple of months, of course, this is purely speculative, and I try to distinguish when I'm basing something on facts versus just kind of speculating. But what I speculate in the next couple of months is that a few more properties are going to come on the market because some of the owners are saying, hey, gosh, the prices are really high right now. And I've made some really good money in the summer because the rentals have been really good. Maybe now's the time to sell. So that would push a few more sellers on the market. the buyers are being a little bit more patient. So as the buyers see that they have more choices, then they tend to offer a little bit less than full price, or maybe we won't see as many multiple offer scenarios like we were seeing a couple months ago. I don't see like prices plummeting. I do see things kind of softening. If inventory increases in any one building, then that does soften prices. But the softening is totally different than collapsing. I don't see that.
Yeah, 100% agree. And I mean, like right now, buildings like Baywatch, who historically have had a lot of inventory, Landmark. All of a sudden, I was looking at Landmark yesterday for a client that wants to get his condo on the market. There's only a couple of one-bedroom ocean fronts on the market on Landmark, which historically, I mean, that building's been flooded.
There'd be 50 units on the market in Landmark. That's
at
not
any
an
given time.
exaggeration.
Yeah.
Yeah.
Kathy, what I'm going to do is I'm actually going to share with you a link. Take a look at that link. And that is, I just took a snapshot of what is on the market right now at Baywatch and what's pending. Take a look at that. That you might find that helpful. If you need some more information, just reach out to Greg or myself. We'll get you some more info as well. Awesome. Okay, so that was the condos. Let's look at where are we at? Let's look at the oceanfront specifically. So 56.55%. Again, that number is holding strong. It kind of goes back to what you were talking about right now, with people looking at properties like this that they can get ahead and rent out. But if you subtract 453 from 808, Greg, that's only 348 units?
Yeah.
347 condos in the entire, this is the entire market. So going all the way down from Pawleys, all the way up to North Myrtle Beach, Cherry Grove, Little River, the entire market on the oceanfront. There's only less than 400 units on the market right now.
Yeah. That's not a lot. I mean, that's not a lot. So, I still anticipate, it's just in my mind, just a slight little decrease in the numbers that you're talking about is healthy, because we finally have a few more. We don't have a lot to sell to buyers, but we have a little bit more. And, but we don't have so much inventory. There's more buyers than there are sellers. So it's still a seller's market, but the buyers are just so frustrated because there's nothing to buy. So when we're able to call them and say, hey, another one came on the market, and they have enough time, 2 to 3 days, to get to our area to look at the property, they're pleased, they're happy. So that's what we needed. We just needed something to show people.
Yeah, I mean, for about a 4-month period, Greg, and you know this better than anybody, it didn't matter what the comps were on properties. It didn't matter. Buyers were buying and they were making offers. It didn't matter what they had sold for. Now we're getting to the point where, even though it's still a seller's market, buyers are saying, okay, show me the comps. What are the last couple of sold for? So that's the kind of change that we're noticing right now. But still, great prices off the oceanfront. I mean, look at that, 75% of all condos are selling quickly. Barefoot Resort is still on fire. Everything up there that we take in Barefoot is selling at great prices and selling quickly. Jasmine Lakes, River Oaks, anything that you can get on a golf course right now. If you've been thinking about selling, this is still a really good time to be a seller. If you've got a golf course condo right now.
Yeah.
And let's look at land real quick. So 21% of land, that's kind of been pretty flat, kind of moving in line with what the single family home resales have been doing, pretty comparable there. But that's pretty much the number. Nothing exciting, nothing drastic changing in the market. Again, a little bit of a softening, but still extreme sellers market is still very low inventory, even though it's slowly growing day by day. It's still super low. I'd love to see, today is the 25th. About another 10 days or so, the numbers will come out for August, and we'll see what the inventory level looks like at the end of the month. Yeah, that'll be interesting to see.
You said nothing excited, and quite frankly, I'm more excited that it's normalizing just a little because of the challenges that we have when it's extreme. Like I get a little worried when we're at an extreme high, because typically, if we look historically, extreme highs, there's always a counterbalance to an extreme low, and then it kind of like levels off. And so I prefer the market to be high, but not extreme, because that's usually not sustainable. So if you luck out and you sell at the extreme high, that's great. I mean, we always like to do that. But typically what ends up happening is people don't take advantage of the extreme highs. Then when they want to sell, it's at an extreme low, and then they end up missing the market. I'd rather it be just a little bit more of a moderate swings. It's kind of a boring real estate market when there's not a lot of highs to talk about or a lot of lows to talk about. It's a little bit more boring, but financially it's probably better for most people.
Yeah,
So,
it also makes sense. I mean, there's people out there not only trying to sell at the height, they need to move. So yes, they can get a great price for their home, but they have nowhere to buy, so they're kind of just sitting there, can't do anything. So yeah, a healthy market, I think, benefits everybody.
yeah, I sure do. All right, well, good, great information. And if any of you need any additional information beyond what we talk about on Myrtle Beach Real Estate TV, please reach out to us. There's our cell numbers right there. You can see them. You can call us. You can text us. Ask any question. You don't have to be at the verge of buying or selling for us to talk to you. We're trying to provide good information to the community, of property owners that are in our area, in hopes that maybe we earn your business in the future. But it doesn't have to be now business, and in order for us to answer your questions. So please reach out to us. We'll be there answering anyway. And Abe, we'll do this again next week.
Yep. See you next week. Take care.
Bye-bye.